is director at Lloyd Electric and Engineering Limited. He's joining us right now on the phone line. Mr. Singhal, thanks very much for joining in. Sir, could you first start by telling us the money that you are getting via this sale? How are you going to use that money, sir?
Well, actually, first I'd like to, step back a little bit and talk about that, what is the transaction that has happened. See, we have been doing very well and growing in the consumer business for the last 7-8 years and have, achieved a very good market share in air conditioners and also made considerable progress on TVs and washing machines. Now, the thing is that from here, if we had to grow forward, we would have to invest a lot of growth capital. And if you see our balance sheet, it was already quite leveraged. So the promoters, the chairman, that is Mr. Punj, decided that, look, maybe it's time that we sell the consumer business and focus on the B2B businesses which have been in the company and look at this as a growth engine going forward for the company. So, what we are
So
seeing,
just one point. So this is a slump sale, right?
This is a slump sale, indeed, yes.
Usually in a slump sale, existing shareholders who will no longer have any nothing to do with the business which is being sold expect to get rewarded in some form or fashion. The point is, you're saying all this money is going to be invested back for your B2B ventures, B2B businesses, capital expansion, etc.
No, of course, no. It will deleverage the balance sheet. That is one objective. The second objective is that we would look at investment in high margin areas, where we can get better margins. And of course, Mr. Punj was with me just now on the call, on an investor call, and he has said that when the deal is closed, he will also see and think about ways and means how we can reward the shareholders.
Why not pay out a special? Why not say that some sort of special dividend or something will be paid out? Does that look like a likely possibility, or does it look remote? Sound remote to you?
No, these are all possibilities. Mr. Punj himself, the chairman, was in the investor call, and he has told investors that, look, right now we have just signed an MOU. The closure will take 6 to 8 weeks. Upon closure, we will announce what kind of monies will be deployed for deleveraging the balance sheet, what monies will be put into high growth areas and high potential areas, and also then what would be possibilities of looking at rewarding shareholders. He's not spelled out anything because he's saying let the closure happen.
Okay. My colleague Anisha is also here. She tracks the sector, the company closely. Anisha, go on.
Well, yes, I just wanted to understand, even if you pay down the debt, you would be left with net cash of around 600-700 crores. Other than the special dividend that, just mentioned, do you think even buyback can be an option to give value to the shareholders?
There are all possibilities open. As I just now repeatedly said, that Mr. Punj has gone on investor call. About 5 minutes back, he ended that call, and he was categorically saying that all the options will be considered and more final details will be, given to shareholders on allocation of the proceeds once the deal is closed. We have 6 to 8 weeks now minimum for closure.
Sir,
what we have to see, Anisha, is that we have a robust residual business as well. Yes, the consumer business has been growing and has been the growth engine. But if you look at the residual business, that is also a robust business which has got, in fact, higher margins than the consumer business.
Well, so then talking about rest of your business, you did mention on the con call as well that there was a part of the OEM business that was actually being factored in the consumer durable segment. Now, what can be that portion that will come back to the OEM business, and what can be the jump up that we can see in the OEM and heat exchange business going forward?
Yeah, that's a good question, and exactly what we mentioned on the call, that right now, because it was inter-segment sale, it was not adding to the revenues. Now, going forward, it will be a sale transaction, and so it could be to the extent of 30% of our air conditioner business.
Okay, sir, and also word on Feathers Lloyd, you did mention on the call that 50 crores is what went to Feathers Lloyd, but are there any talks of merging the two businesses now, Feathers Lloyd and Lloyd Electric?
I am not aware of any such transaction. I'm here on the channel to comment on the deal which has happened, and I'm delighted because I think personally it's a win-win situation. See, the brand has reached a very, very strong point and it's gained acceptance. Now, from here, this brand can go in multiples forward if you have the right backing in terms of financial resources. Now, we could have done that, but it could have further leveraged our balance sheet. So the fair valuation, we have backed out, given the brand to Havells India, who can take this forward, because that's one situation. Secondly, we will also enjoy the future fruits by being suppliers to Havells India.
Okay, Mr.
So
Singhal.
it's a situation for both.
Okay, Mr. Singhal, your remaining business, which is going to be primarily B2B, I think your FY15 EBIT was around 109 odd crores, which rose to around 130 odd crores in FY16. What is the projection that you might be working with, and how much of capital would you be employing in the remaining business?
See, the capital employed in the remaining business will be very minuscule. It will only be to, streamline capacities, etc. So it's not a very sizable capital injection required to maintain the existing business.
But
So
so
what
your
would the
B2B business is already running at capacity utilization of 90%. Wouldn't you need to invest more into that business, given that you are looking to grow that business?
No, not very sizable capex, because there's only rationalizing of bottlenecks. It will not be a greenfield new plant.
And so you also
Whatever
mentioned...
bottlenecks are, those will be. It's not significant capex. If I have to take it from 600,000 to 800,000, there is not really a very large capex required.
Fair enough, sir, but you also mentioned that you're looking to grow organically and inorganically over the call. So what are the various avenues you're looking to grow at organically and both inorganically? Which are the avenues or the areas that you're looking at?
You heard the investor call, as you said earlier, that you were on the investor call. So Mr. Punj was very clear. He said that, look, we are looking at increasing our OEM business. We are looking at growing in the rail and defense air conditioning, in transport air conditioning, and these are all high margin businesses.
I just want to say, you obviously are well aware of what the stock did yesterday. It was down sharply, sir, and I think it's shareholders who bought the business not just for the B2B or the B2C, but for both lines of businesses. Now that one line of business is being completely sold in a slump sale transaction, the existing shareholders be rewarded in some way, some fashion. I mean, I think we take all your points about B2B margins being higher and that offering a greater growth avenues, etc. So, but you're saying that that option is on the table as Mr. Punj outlined in the con call just a few minutes back, right?
That's right. He clarified this to the shareholders on the con call. And what I believe is that, see, price is a slave to earnings. I mean, the famous line. So, if earnings are good and earnings are going to grow, then shareholders are in for a good time. The question is that, are the earnings going to grow? Are the earnings going to be continually growing? What we see here is, a balance sheet which is completely deleveraged. We have cash available to invest in these areas. These are all very positive signs going ahead to increase and grow earnings, which is what I think share prices should depend upon.
So fair enough, just one last question coming from my side. A lot of experts have been saying that it would have been better, or the street was looking at the two businesses would be demerged. There would be a consumer electric business and there would be an OEM business, and that would have been better in terms of value unlocking for the investors. Is there any rationale why we went for a slump sale basis and not the demerger route?
Well, this was also answered on the investor call. Mr. Punj himself said that we have preferred this route after taking into consideration the tax implications and other implications also. So he has clarified this on the investor call clearly, that looking at the overall structure and the tax implications, this is a preferred route.
Okay, fair enough. Mr. Singhal as well as Anisha, thanks very much for joining in. We really need to wrap up the conversation now.